We got some massive news for CoreWeave stock investors as the company's management team elaborated on the reasons for its acquisition of Core Scientific and provided insights into their latest performance on revenue, profit, and operating income, which surprisingly the company did generate a couple of $100 million in operating income. I'll discuss it in greater detail here in this video, so stay tuned and let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the management team discussed their proposed acquisition of Core Scientific, saying that verticalization creates tremendous operational and financial efficiencies that will strengthen our ability to serve our customers at scale, which will allow them to scale faster and more efficiently. So let me talk a little bit about verticalization or vertical integration and what it could mean for business. I know there's a lot of misconception out there about vertical integration and how it's a positive thing. Sometimes it is, and in this case, CoreWeave believes it will be. But it's not the case all the time. It's not the case all the time that, for instance, if you're a car manufacturer and you're, building cars, that it makes sense for you to also vertically integrate into building and manufacturing tires, for instance. Or instead of integrating tires into your business, you purchase tires from a supplier like Goodyear or Pirelli instead of making the tires yourself, right? So it's not always the case where you say, you know what, we have the money and we want to vertically integrate and it will be positive. It's not always the case. You have to make that calculation on a case-by-case basis and determine if it makes sense for you. And in this case, CoreWeave's management team has likely made this calculation and believes that integrating vertically will be beneficial, right? And so one of the reasons they believe it will be is because it allows them to scale faster and more efficient. And maybe the scaling faster is more important to CoreWeave at this moment when their revenue in the most recent quarter, as I might touch on a little later in this video, their revenue increased by over 200% year over year in the most recent quarter. So when you're in a business that's growing that quickly and there's that much demand for your product, speed of increase is just as important as efficiency. You might be willing to pay a higher price if it means that you can increase faster, right? Because it gives you speed, and that speed gives you a competitive advantage because you have all this backlog, you have all these customers waiting. And so if you don't operate with speed, you might lose some of these customers who don't want to wait, who might go to someone else. And so scaling faster, the speed part is also just as important as efficiently, if not, I think more so in this case. In this case, it might be more so because of how quickly demand in this category and how quickly its backlog is increasing. They went on to say that this scale enhances their flexibility to take on new projects and meet accelerated customer demand. The acquisition would drive the immediate elimination of more than $10 billion in future lease liability overhead. So this sounds like the company had $10 billion in lease liability with providers of this service that they are accumulating, and buying this company would eliminate more than $10 billion in future lease liability. And what that means on an annual basis is the company anticipates $500 million in fully ramped annual run rate cost savings by 2027. So in 2 years' time, they believe this acquisition will save the company $500 million in costs. So not only will it allow them to scale more quickly, to grow more quickly, but they also expect it will save them $500 million in cost. So the reasons behind this acquisition of Core Scientific seem reasonable. Whether or not they realize these savings is another story. Sometimes management teams come up with a calculation for how much they believe they can save by making an acquisition, the synergies, etc. And sometimes they turn out to be overestimated and sometimes they turn out to be underestimated. So we will see as I will follow this company over time and determine if this was a prudent acquisition or not based on the results from this acquisition. This is a newer publicly traded company, right? They only recently IPO'd. And so we don't have that much information on the company's performance as a publicly traded company. So we're building that information now as management is discussing and talking to us, investors, about their decisions, why they made their decisions, the reasoning behind their decisions, and then over time reporting back to us the results of their decisions. We build information on the quality of the management team's decision making, which is one of the more important things to consider when you're evaluating a business for investment. So this document I'm reading from is CoreWeave's most recently completed earnings call with Wall Street analyst, where they provided all these insights. I've made this highlighted document available for my channel members. You can see the link in the description to see all the benefits you get as a channel member and which level you would like to join at. So the company went on to say that they are executing with pace and purpose amidst a market which supply-demand imbalance is only deepening as new enterprise adopters increasingly compete with large AI labs for limited capacity and services. And this is true. I can validate this because I follow over 200 companies and I'm seeing the same thing being said in a different way from nearly every company that's operating in and around the artificial intelligence industry. The supply and demand imbalance is true. There is more demand for these products than there is supply. And this is true for, I covered companies like NVIDIA, AMD, Microsoft, Alphabet, Coca-Cola, Pepsi, Home Depot, Lowe's, Walmart, Target. I'm covering companies from different industries, and I hear similar things regardless from industry, that demand for artificial intelligence is soaring. Companies would invest even more if there was capacity available. But right now, there's so much demand for these products and supply is limited. And so people who are spending the most are getting their products the soonest. And right now, it's the large hyperscalers are getting their products the soonest. And those large hyperscalers have relationships with companies like OpenAI and ChatGPT, which use up a lot of that service, right? ChatGPT has hundreds of millions of monthly active users already. It was a company that ramped up to that level of growth, the fastest of any company that's grown to this size, and it continues increasing. The company is considering raising another $6 billion so that it can invest in its new capabilities, invest in supplying the market with more and more AI capabilities. So this is huge news for CoreWeave stock investors, and it's good news also, not just big news, but good news for CoreWeave stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.